Just 2 years ago, cannabis stocks were the hottest new ticket, with everyone and their grandmother buying up Canopy and Aurora Cannabis stocks. The hysteria even rivaled that of the early Bitcoin craze. As you know, the party has ended. With companies posting billions in losses, revenue declining, and increasing volume with decreasing share price, there's been a bank run on cannabis stocks in 2020. This video will include an Aurora Cannabis Stock review, one of the giants of the cannabis sector whose fall from grace has been unmatched. In its heyday, cannabis companies were known for moving fast, spending a lot on big acquisitions, which appear now to be inflated, big marketing campaigns, and big salaries for their CEOs. Notably, CGC raised $5 billion in a deal with Constellation Brands. Aphria was regularly making $100 million deals, and at the pinnacle of this hysteria was Aurora Cannabis Stock news. With Aurora stock analysis, there are two main reasons to consider buying now. First, there's the company's position in the Canadian market. They currently have supply agreements with 9 of the 13 Canadian provinces and territories, and ACB has the highest peak production capacity if they can ever reach peak production. Canada's largest province, Ontario, will be opening up more cannabis stores this year, which should help Aurora Cannabis stock price from increased revenue. ACB is also looking to profit from the recently opened market for cannabis derivative products. And the last reason is that Aurora Cannabis does have international assets in 24 countries. One of its big claims to fame is its ability to capitalize on nascent markets when they become available. As marijuana laws loosen, Aurora is poised to ramp up its revenue and projections for future emerging markets. Now let's look at the glaringly obvious reasons to run as fast as you possibly can away from Aurora. Aurora has yet to deliver any semblance of strong financial results. In recent Aurora Cannabis stock news, they posted a decline in net revenue in the quarter at $56.6 million, down 26% from the prior 3-month period. They also reported an adjusted EBITDA loss of $80.2 million, a loss greater than the $39.7 million in the prior quarter. ACB also reported a 26% decline in cannabis production just quarter over quarter due to production changes. A second reason to avoid Aurora is that they made a ton of acquisitions in the sector's heyday. They spent hundreds of millions of dollars on assets which now appear to be way overpriced and way overinflated at the time of buying. In fact, even in all of the hype of CGC and Aphria ostensibly making bad financial decisions, Aurora outperformed them in this area by accruing $2.4 billion of goodwill on its balance sheet. Much of this derived from their acquisition of MedReleaf. Now, this brings me to my main point, which is the massive problem that I see in the cannabis sector as a whole is what's called tunneling. Now, every company has questionable expenditures, acquisitions, and some forms of nepotism. CEOs give big construction contracts to their friends, their brother-in-law, whoever can offer them a kickback in the future, essentially. Here's a short clip of Yale professor and Nobel laureate Robert Shiller explaining some examples of tunneling.
Tunneling is sneaking away with value, putting it in your own pocket if you work for a company, rather than in the stockholders. The stockholders own the company, they're supposed to get the money. But the employees have never met the stockholders. And they sometimes think, you know, there's a lot of things we can do. Let's do them. And the money is going to come from the stockholders and going to somehow end up in our pockets. So I'll give you just examples of tunneling. The company has some asset and it's going to sell it, right? So asset sales. In part of the doing business, how does the company make sure that it gets a good price? So if you work for a company and you're in charge of the asset sale, you can tunnel. You say, I'll sell it to my brother-in-law at a really low price, all right? He'll wait a while and then he'll pay me off later. That's hard to detect, because how do you know if you are a stockholder? How are you going to find out? That's stealing from the company, right? If you sell it at a non-market price. How does somebody know that? I mean, they can't be the stockholders can't be looking at every deal. Contracts. The company is signing a contract to provide something to them regularly. They can pay too much. Now, it could be your brother-in-law who's running, but hey, let's not be so obvious about it. It'll just be some guy that I met and we're both antisocial personalities. We've just discovered each other, and you know, it doesn't even have to be written down. I'll give this contract to you over somebody else, and I'll pay you too much. And you know, sometime later, you take care of me. You know, I did it for you. You return the favor.
To me, this is Aurora Cannabis's biggest problem. They spent way too much money in the beginning, many of which were made in questionable faith, and now Aurora Cannabis stockholders need to pay for them, all while trying to earn a profit. With $2 billion worth of goodwill on the balance sheet still needing to be rectified, they are a long ways away from anything resembling profitability. Am I crazy here? Do you have a different opinion? I would honestly love to hear it. Is there something that I'm missing? Now on the share price itself. When a company dips this low, it's tempting to think that it can't go any lower, and thus a dip buy starts to look attractive. Personally, I don't see the temptation. The overall sentiment of the sector is weak. It's made up of bag holders, speculators, and short sellers. Yes, it might pop, but I know a lot of people who were saying that while Aurora was at $3. I'm seriously curious to hear your opinion on this. Do they have a chance to come back? Is the sector going to be revitalized in 2020? But what catalyst is really going to make that happen? I hope you liked this video. If you did, leave a like, and if you want to stay up to date with the latest stock market news, then subscribe.